All right, guys, welcome to SammybrainFx. In today's video, we are going to be looking at market structure. Market structure. So, market structure is the fundamental of technical analysis. So, for you to be a successful trader, to know how to analyze the chart very well, it is very, very important you understand market structure. So, without wasting much of our time, let's dive in. All right. So, what is market structure? Market structure refers to how price behave over time. How price behave over time. Understanding the market structure is crucial for identifying potential trading opportunities and making informed decision. So market structure will help you to identify trading potentials and also opportunities and how to make informed decisions. So you don't just place trade, you don't just buy, you don't just sell. So you know the reason why you are buying and where you are buying from. You know the reason why you're selling and where you are selling from. So it is very, very important. Okay, so there are three types of market structure. Number one, we have the uptrend or the bullish market structure. Number two is the downtrend or the bearish market structure. Then number three is the ranging markets. It's called the ranging markets, sideways movement or consolidation. So when we see the market is ranging, it means it's consolidating. It is in a sideways movement. So let's look at the diagram to understand these different structures. So the first one, we have our bullish market structure. Our bullish market structure. So in our bullish market structure, we'll see that the market is making a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs and higher lows. So the market is trending. It's in an uptrend. It is bullish. It is going up, meaning the bulls are in control. The buyers are in control. So the market is going up. It's in an upward movement. Okay. All right. Now, also something very, very important you are going to understand is what we call break of structure. What we call break of structure. So when we make a higher high and a higher low, for we to for the market to for we to be sure that the market is actually bullish, it's going to break the previous high. So that's what we call break of structure, break of market structure. That's what we call break of structure. So this is a BOS rather. So this was a higher high, higher low. For we to have another high, there was a break of structure. Okay. So this is our new high. So we'll go down, higher low. So to have another higher high, there is a break of structure to the upside. So the market retraces again. So for us to have another higher high, there is a break of structure. Okay. So, and there's a higher low. For us to have another higher high, there is a break of structure here to the upside. So it continues on and on and on. So we must see this in price actions. We must see the market behaving like this for we to say, oh, the market is in an uptrend. So it must be making a series of higher highs and higher lows. Okay. And also something very, very important that we are going to notice is that when there is a break of structure to the upside, so this was the previous low, there was a higher low. For we to have another higher high, there's a break of structure. So that break of structure is what we call impulse. There was an impulse move. Okay, impulse move, impulse move. That's the real move of the market, which is actually bullish. Okay, so for the market to make another high, it has to retrace. It has to retrace. That's what we call correction. That's what we call correction. So there was correction, that's retracement, which from this previous high, we have a higher low. And then to get another higher high, there is a break of structure. So now this movement upwards is our impulse move. So this is the high we got. So we now retrace again to a higher low. So this movement downward is what we call our correction. It's what we call our correction. Okay. So now this was a higher low. So we move to the next higher high, which there was a break of structure. Okay. This is what we call our impulse move. So this is another impulse move, another impulse. And then to have a higher low, it is what we call our correction. So there's another break of structure. We have another higher high break of structure here. So the movement upward is impulse and the movement downward is correction. So now for the market to go bullish, it does not just go like this straight. No, there must be a series of higher high, higher lows, higher high, higher lows. and so on. So that's for the bullish markets. So now let's head on to the next one, which is our bearish market, which is our bearish market. So this is our bearish market or downward trend, bearish market or downward trend. So when is the market said to be bearish? Okay, when is the market said to be in the downtrend? So we see the market making a series of lower high and lower lows, lower high, lower lows, lower high, lower lows. Now remember, okay, now just like we see in the bearish, in the bullish market, okay, for the market to make another high, there was a break of structure. So now in the bearish market, when we have a lower high and a lower low, okay, a lower high, for we to have another lower low, there is a break of structure to the downside. Okay, so this was our lower high. For we to have another low, there was a break of structure. So this is a new lower low. We have a lower high. So for we to have another lower low, there has to be a break of structure. So now there was a break of structure to the downside, and we have a lower low. So it now moves up. We have a lower high. For we to have another low, there was a break of structure. This structure was broken, so we have a new low. Okay, and so on and so on and so forth. Okay, of course, the same thing, just like the bullish markets. When the market is going down, that's the impulse move. So when it goes up, that's the correction. Okay, if it goes down to make another low, we have the impulse move. If it goes up, that's our correction. If it goes down again to make another low, that's our impulse move. Okay, so in summary, when we have the bullish market, the market is going up, it's going high. Okay, it's going high, and then each movement up, which is its focus, is what we call our impulse move. And when it retraces, okay, we call it correction or retracement. So it traces before it goes up. So the focus here is up, bullish. Why the focus here is bearish, is going down. So for downward movement, each movement down is the impulse move. So it will now make a correction. So another movement down is going to be an impulse move, and then movement up is correction. Movement down is impulse move. So this is the bearish market structure. So now let's head on to another market structure, which is the third one. We call this one the consolidation, ranging market, or sideways movement. What do we see in this kind of market? So for a market to be called ranging market, it must be doing something like this. So meaning it's making a series of equal highs and equal lows. Okay, so it goes up, it comes down, goes up, comes down, goes up, comes down, goes up, comes down. So you have something like this. So you have something like this. We have something like this. So it's making a series of equal highs, equal lows, equal highs, equal lows. Okay, so it's neither trending. Now it's neither in an uptrend or in a downtrend. So this is what we call consolidation or a sideways movement. Sideways movement. All right. So now let's continue. All right. We are going to look at market structure in its entirety. So we are going to be combining both the uptrend, the downtrend, and consolidation. So now we have a structure like this. If we have a structure like this, okay, the market was going up, higher high, higher low, higher high, higher low, higher high, or higher low, higher high. And then the market gets to this point, for example, it consolidates, it consolidates, it consolidates, and then it starts going down. All right, so let's let's arrange this well. So if we have something like this. Okay, let's have this here. So if we have something like this, so what do we notice here? What do we notice here? Now the market was in an uptrend. Okay, it was in an uptrend. Remember, in an uptrend, the market is making a series of higher high, higher lows, higher high, higher lows. So now there was a high here. So we had a break of structure. BOS, there was a break of structure. So the market, this was an impulse move. So the market broke structure and it retraces. That's correction. It moves further to have another higher high. So meaning it broke structure. There was another high. So there's a break of structure there. And then the market retraces. We now have another high here. There's a break of structure. There was a break of structure. So we have another high there. Okay. So we have a new high. And then now when the market gets to this place, to this point, it was neither bullish nor bearish. So it was neither in an uptrend or in a downtrend. So you see what the market did here. So after this high that was created, it created this low. Okay, it didn't create another high. It was just consolidating. So when the market got to this point, it broke structure to the downside. So there was a break of structure here. Now, note, very, very important. So remember, the market was in an uptrend and then there was a little consolidation. Okay, there was a little consolidation and then the market moves down. We have a break of structure. So now this break of structure that changes the direction of the market is what we call change of character. CHOCH. Okay. Let's have this cloned. So we'll have a break of structure. That's a BOS. We also have a change. Also have change of character. Change of character or CH. Change of character. So BOS is break of structure. CHOCH is change of character. So now what happened here? The market was in an uptrend and then it ranges a little. So when the price came here, it broke structure. So now this break of structure that changes the direction of the market is what we call change of character. Change of character, meaning the direction of the market has changed. The bias of the market has changed. It's no more bullish. It's now bearish. So there was a change of structure. Why do we see there was a change of structure? There was a change of structure means that the market, after creating this low, this was a lower high. Okay, this was a lower low, a lower high. This was a lower low, a lower high. Let me put that there. This was a lower low. And this is what we call, of course, our lower high. So this was lower low, lower high. And then for the market to create another low, there was a break of structure. So this break of structure that changes the direction of the market from bullish and trending is what we call change of character. So the direction of the market has changed. So you have our change of character, and the market retraces back, it made another lower high and then a lower low. Okay, so the break of structure now continues. So we now have we call this a break of structure, BOS, 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 and then the market retraces back. Okay, it retraces back and then it retraces and goes up, and then it comes back and break another structure. So there was also another break of structure here, also another break of structure to the downside. So it continues on and on and on. So now, please don't get this twisted. It is simple and straightforward. All right, so our change of character, okay, change of character is a break of structure. All change of character, they are all break of structure. So when we say change of character is a break of structure. But not all break of structure are change of character. Okay, so like all year we are having break of structure, yeah, break of structure, break of structure, break of structure. But here it is called change of character because at this point the bias of the market changed. So the market was bullish here, it was going up and then it changes a little. So now when it gets to here, it changes from bullish to bearish market. So this is what we call a change of character. This break of structure is called change of character, not just break of structure. It's called change of character because the bias of the market has changed. Okay, and then it continues, break of structure, it was going down, down, down. So we must understand the difference between change of character and break of structure. All right, so if you have any question, you can put it in the comment section. Okay, all right, so the next thing we are going to be looking at, um, is what we call our swing structure. Our swing structure. Now, remember, if this is a bearish market, if this is a bullish market, the market is going up. Hardly will you see a market doing something like this. Okay, this is a bullish market, right? A bullish trend. Hardly will you see the price just behaving like this? Up, 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 up. Maybe you took a trade here, it went up, up. It doesn't do like this. Okay, so now this is what we call our swing structure. This is our swing structure. But we know that the market does not behave like this exactly. Okay, so in a rechart, what we will see, we are not going to see something like this. What we are going to see, for example, if it's a bullish market, we are going to have something like this. All right, we are going to have something like this. We are going to have something like this. All right, let's correct this. Let's correct this. All right. So, for example, in a bullish market, this is what we call swing structure. So called swing structure, meaning the market is just making is a series of higher high, higher lows, higher high, higher lows, direct. So now, but for here, we have example of substructure. Substructure. All right. So normally this is the swing structure. It was higher high, higher low, higher high, higher low, higher high. But in a substructure, when we have a higher high, the market doesn't just come like this direct. Okay. There's going to be a little retracement up, down. These are what we call substructures. These are substructure within the market before we now make another. So this was the previous high, and then there was a break of structure to the upside. Okay, there was a break of structure. This is another high. We have now have a higher high. We have a higher low. Having made a higher low, there is having made a higher low. Okay, there are substructure within, and then we got to another higher high. Okay, before the market made higher low before it makes another higher high. So you see something like this. Okay. So the market does not just behave like this high low, but this will call it the swing structure. Why this is what we call our substructures. So these are the swing structures. These ones, they are the swing structure. Swing structure. Swing structure. And then these little ones, what we call substructures. So these are the substructures. So these are substructures, swing structures, substructures, 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 and then there's another swing structure, and then it goes substructure, substructure. So that's how the markets move. So this is for a bullish market, and then if we have that of a bearish market, okay, if we have something like this, bearish market, meaning the market is going down. Okay, price is going down. All right. So these are substructures. So, but in between the substructure, so within these substructures, within these are swing structures rather. So within this swing structure are what we call the substructures. So we'll have something like this. So there was a break of structure to the downside. There was a break of structure to the downside here. There's a break of structure to the downside. So this was a lower high, lower low. lower high, break of structure, lower low, lower high, those break of structure. Then we have another lower low. Okay, so this it's how it looks like. So now let's move on to the main charts. Let's move on to the main chart, to the real chart. All right. Okay. Okay. Now, this is a real chart, how the chart looks like. So we are going to be identifying all what we talked about. So now we'll see here the market was trending. It was in an uptrend, and when it came here, it was now in a downtrend. And then it went back uptrend and on and on. So how do we spot this? Okay. So how do we spot out the market structure? So we see there was a high here. There was a high here, and then there was a break of structure. This was a lower high. There was a break of structure to the downside. So this structure was broken. And then it forms another lower high here. Okay. It forms another lower high. And then the structure was broken here. There was also another break of structure here to the downside. And then the market retracing, there was a lower high here. There was a lower high. And then there was a break of structure. There was a break of structure to the downside to have another low, which is a lower low. And then there's a lower high here. So there's also another break of structure to the downside. We have a lower high. So we have a lower high. Now we are not going to be, this is the one we are going to be using, because if we should draw something like this. Okay, let me take this away. If we had to draw something like this was a lower high. This will now be our next low. After this break of structure, this will be our next low. Okay, this will be our next low. So now there was a lower high. Now observe what happened here. Observe what happened here. Okay, see. All right, so this was a lower high, and then this was a lower. So there was a break of structure to the downside. So market it formed a new low. Now for it to continue downtrend, this is supposed to be a break to the downside. Okay, after this break of structure to the downside, now for it to continue in the downtrend, we should have had something like this. Down, down, down. But observe what happened here. After this low was broken, then we had another low. Okay, instead of making a lower low, there was now a higher high. So there was a break of structure to the upside. So there was a break of structure to the upside. That's a higher high. And this is a higher low. Okay, after this higher low, there was a break of structure to the upside. We have another higher high. And then we have another higher low. So after this, there was a break of structure to the upside. There's a break of structure to the upside. We have a lower high. I mean, a higher low, another higher high. So there was a break of structure to the upside. Okay. So there was a break of structure. break of structure to the upside. So the market retraces. And then where is the next break of structure? The next break of structure is here. So after price retraces, the next break of structure is here. So there's a break of structure here. Okay, break of structure here. And then after this, observe what happened. So, all right, let's not forget here. What happened here was that the market was in a downward trend. But when it got here, there was a break of structure to the upside. Okay, so this is what we call a change of character. So there's a change of character here. Remember, all these are just BOS, break of structure. All these are just break of structure, but here there's a change of character. There's a change of character here, CHOCH. So there's a change of character here, meaning the direction of the market changed. So it went on and on and on. So when we now got here, there was a break of structure. Now, there was a break of structure. It's as though the market wanted to go down. But no, this is what it did. There was a higher high, and there was a higher low, and then it continued. Okay? The market continued. Okay? Because this low that was created, it did not create another low that broke this previous. So this previous low was not taken out. So the market continued an uptrend. So had it been to have something like this, after coming here, had it been it broke this low, that's when it would have continued in a downtrend, but it didn't. So it went up instead. So it continues in an uptrend, and there was a break of structure, and it retraces. There was a break of structure upward. There's a break of structure, and then a retracement, break of structure, break of structure, and then retracement, break of structure, break of structure, retracement. There's another break of structure here. And then when we now got to this point, there was a change of character here. There was a change of character here, a change of character, meaning the market came and broke this low down here. Okay, broke this low down here. So a new low was formed. A new low was formed. So it made a higher high, and then it broke this low. So this low was broken. This low was broken, and then it retraces. It broke this low that was formed, and then the market came. It retraces and broke this low. Okay, so this low was broken, and then when the market got to this point, there was a change of character. So there was kind of consolidation here. So there was a change of character. Instead of going lower, it broke high. There was a break of structure. So this previous high was broken. There's a break of structure here. And then after this break of structure, this high was made, and then there was a new low here made, and then there is another break of structure. So the market continued higher, and then after this, there was a break of structure here. The market continued on and on. The break of structure, the retracement, there's also another break of structure. Okay, can just say the market moved like this. It moved this way, and there was a retracement. There's a break of structure, and then it went on and on and on and on and on and on and on. So you take your time and understand how the market move. This is very, very important. Okay, just take your time, go through your charts, go through the charts, try to know how to spot the direction of the market, understand the bullish and also the bearish market. So take your time to practice, take your time to practice, take your time to practice, so that whenever you open the charts, you'll be able to understand what the market is doing. You know where there's a break of structure, you know where there's a change of character. Okay, so take your time and study this. So in our next video, we are going to be looking at supply and demand zone, and we are going to look at order block, fair value gap, and other things. Okay, the things we look at for before we place our trade. We're also going to look at entry criteria. So please do well. If you have any question, do well to type it in the comment section. And do not forget to like and share this video. Do not forget to like, to subscribe, and share this video. So till we meet again in our next video. Bye.